everyone, today's video is all about a recent case, another court case that caught my attention when a transaction which a taxpayer undertook, unintended consequences, basically when it went wrong. Why did it go wrong? What did they think was going to happen when it went, when I say it went wrong for the taxpayer, I mean they thought it was going to be tax-free and it wasn't. It incurred a load of tax, specifically in this instance, capital gains tax. So, what happened? Mr. X got a portfolio of properties, residential properties, and he transferred them to his wife's limited company. So Mrs. X, so she has a limited company, and he said, right, I'm gonna transfer these across. So, not a gift per se, but it's consideration. 300 grand that these properties cost. So he said, well, I want 300 grand for offloading those properties to my wife's company, but we'll leave the consideration outstanding on director's loan account. What does that mean? It basically means that the limited company owned by Mrs. X, it's like an IOU to the guy, Mr. X, for 300 grand. And it'll be sat there as a creditor on the balance sheet of the company to pay him as and when it can afford to do so. So it wasn't strictly gifting him. It was a transaction at arm's length, or so he thought. 300 grand, thank you very much, but we'll leave it as an IOU in the company's books. Very good. So this guy comes to doing his tax return and didn't bother declaring any capital gain. Why would he? Because in his view, he thought, firstly, there's no capital gains tax here because these properties cost 300 grand and he just moved them across at cost. So he's offloading something that cost him 300 grand and he's getting 300 grand for it from the company when the company can afford to pay it. That was his first thing. His second thought process was, well, actually, there's no CGT in any case, notwithstanding the fact I didn't make a turn, didn't make a markup on the transfer, because I'm shifting them to my missus. And as we all know, transfers of assets between husband and wives and vice versa benefit from the spousal exemption. So there is no CGT when you transfer assets between spouses. Oh, okay. So, problem with that is this. Let's take number one of his thought process, his rationale. No CGT when the properties are transferred. There is a rule in the tax world that says, basically, when it's two connected entities, i.e. between Mr. X and Mrs. X's companies who are connected, HMRC or the tax law says we're going to discard whatever your consideration is. In this case, 300 grand. I don't care that you say I'm going to sell it for 300 grand because it's not an arm's length transaction to a third party, to a connected company. If he was selling it to anybody else, he'd sell it for market value, you'd have thought, unless he's got a bad bargain, a genuine bad bargain, and someone managed to pull the wool over his eyes and pay him a lot less than the market value. But the point is, the rules say in this sort of situation between connected entities, you substitute the market value for the properties in your capital gains calculation. So in other words, he would have gone from zero capital gain to a capital gain, assuming the properties had gone up in value the years that he'd owned them. So that's the first thing. Second thing, remember his thought process, why there was no tax, he said, oh, well, it's between me and my spouse anyway. Well, okay, I see where he's coming from, but unfortunately, you've got to be really specific in the rules, and that exemption would have been between him and her, not between him and her limited company. Makes a world of difference. So, had she not have had the company just transferred properties to her as an individual, yes, absolutely, there's no CGT, but he didn't do that. He transferred it from himself to her limited company, which is nothing to do with the spousal exemption. So, when this thing went to the tribunal, because HMRC investigated, said we want a few quid in tax, went to the tax courts, and he basically then stumped up the defence. He said, look, I want to basically say under the common law in Britain, forget tax law, common law principles, common mistake, the transaction should be void. I made a mistake. I shouldn't have done this. So let's rescind it. Let's reverse it. So the judges looked at this and they said, all right, well, first of all, the transaction was fully executed. Had actually he got partway through this transfer and then spoken to a tax advisor worth his salt, they would have said, whoa, what the hell are you doing? You cannot do this. It's going to cost you a boatload in tax. Before that had been substantially completed, and at that point, yes, in theory, he could have said, right, back out, stop it, bin it off, let's just get back to the status quo. That could then, under common law principles in the UK, have resulted in a void transaction, and he would have been all right. But that's not what happened. He kind of did the event, fully executed, properties went from there to there, legally, done deal, then got investigated, then went to tribunal and tried to plead the defence of common mistake. The judge just said, that ain't going to wash. Okay, so what he also did as well, he actually reversed the transaction. So later on down the line, the company did give these properties or dispose of them back to Mr. X. So he did, as far as the paperwork was concerned and land registry or whatever, eventually get back to the status quo, to what it was at the beginning. But again, the judges said, it's too late, you can't do that, you've legally executed this. So there is capital gains tax consequences from doing what you did, and you have to pay the CGT. So, cautionary tale there. For goodness sake, do get proper tax advice. I mean, you wonder who was advising this guy, because the taxpayer's arguments are so fundamentally flawed. Any bloody tax trainee could have told him in about 30 seconds that is not an inter-spouse exemption. And the fact that, again, you can't just flog it for the cost. It has to be the deemed market value, because it's to a connected entity. So anyway. There you go. It caught my attention. I thought I'd share that with you. Let it be a warning. Don't just dive into transactions. Do get proper professional advice. So if you like this video, please do subscribe. And as always, I'll see you soon.